All right, everybody, it is Friday the 13th, but it wasn't a witchy, scary day for the stock market. The Dow was up 2,000 points by the end of the day. Yesterday, I told you, I was buying into that panic. I bought some stock yesterday. I bought Apple, I bought Tesla, I bought Intel, I bought Delta Airlines, I bought ExxonMobil, and some other companies. So had a nice rebound today. Now, one of the reasons I went into, by the way, I also said I covered a short position, my principal short position that I had on for the last few weeks, and that was a big score. Anyway, what's going on? Sentiment, emotion got extreme. As a matter of fact, just as a little anecdote, I went to my local grocery store here today, and it was madness. I'm sure a lot of you have seen the same thing. I mean, people going crazy, buying everything, stocking up on stuff you would never see them buy. Some lady with like 10 cartons of eggs, toilet paper piled up, paper towels like it's the end of the world. And it just made me think, when I saw the stock market yesterday down 10% after having come down so far, and then seeing all these people crazed out of their minds. I mean, it's mass hysteria, mass panic. You got to think about the percentages when you're talking about the virus, and I'm sure many of you have seen the comparisons between regular flu, 5 million people annually get up to 30 million people annually get the flu, 20,000 to 50,000 deaths annually. This is a fraction of that. Now I understand it is spreading rapidly, but at the same time, the reaction has been hyperbolic. It has been, I'm talking about, you just look at what's going on with the closures and everything. That's probably all good. You want to get some of that social distance so people are not communicating the disease, and it slows or it halts the spread, but still. Anyway, let's talk about the markets. Big day up. Trump declared a national emergency. That will immediately release up to $50 billion in funds. You got FEMA now will be able to help out. 50 billion, we're still looking for a bailout or a fiscal package from Congress. That won't happen until next week. So that's all good. But it may not just be a money story. Remember, this is not simply a financial crash where you throw money at it and, the liquidity is restored and everybody goes back and businesses are running. You got a pandemic. People are becoming sick. Businesses and events everything's shutting down. So the economy literally shuts down. And it's not a question just of throwing money out there necessarily, I don't think, because you gotta bring confidence back and you gotta, take care of sick people. So that's not necessarily something that money can fix, which means that the economic impact may be enduring and there may be a longer term malaise from this. So, look, the market to me was highly, highly oversold, extremely emotional. You had to buy panic. That's what I said yesterday. And I suspect we'll see the market rebound further after today's rise. I mean, it still can have a ways to go before this rebound fizzles out. And I think at some point it will fizzle out and the fundamentals will come back into focus. We're gonna start to see a deterioration in the economic data. But I mean, that still has to play out. I think right now you have to look at the market from a technical, emotional sentiment perspective, and it is extreme overdone on the downside. So there's opportunity there. And again, if I can invoke once again the message from yesterday's video, the one thing in history that has always been true, always. A lot of things, they talk like it's true, but it's not. But this is one thing that is true. You always buy panic. All right? And as I said yesterday, we can never be precise on the absolute moment of when to buy and sell. That is an unknown. But it should not keep you from taking action. You take action. Like Gary Kasparov said, in a game where the outcome of a decision is unknown, you make the decision based on the best reflection and information that you have, and you move forward with it. If it doesn't work out, you push through. And how do you push through? With inner strength. You push through with inner strength. I want to talk about gold, which had a huge drop today. As a matter, and it fell well below levels where I thought we'd see it hold. And those levels were around the 1560 area. We got down, I think, to 1500, and it looks now like gold is vulnerable all the way to 1450, 1460. But I was kind of surprised because the 1560 level was a level where we previously saw commercials in the gold market. That means gold producers, gold merchants, and you know, these guys in any commodity, the commercials are the savviest. They are involved with the production or distribution or manufacturing of that particular commodity. They really have their pulse on the supply demand. So when you see them buy and when you see them sell, it's often a very good indication. Maybe not for exact timing once again, but it's a very good indication of where they see value. And that 1560 level back in January, that held. And they were net buyers at that level. So we just went right through that today like a hot knife through butter. And some of these gold ETFs really got hammered. Really got hammered. I mean, that the one JNUG, JNUG, I think it lost 70% today in one day. Unfortunately, that thing is tied. It is a leveraged ETF based on futures contracts, and so you have, I mean, that was a bloodbath in there. But gold itself, I still believe, is in a longer-term bull market. But now we're going to have to look at a pullback to around the 1450, 1460 level and see what happens. But let me mention one thing, because this is very important. And this has been a crazy week, not just in the markets, but in central bank activity. We saw the Fed with this massive repo liquidity injection of $1 trillion. We saw the ECB not cut rates, but raise the quantity of asset purchases and extend their quantitative easing until the end of this year. A lot of people who are misinformed always say that those actions are bullish for gold because it's printing money, right? They're printing money. They're printing money, right? Well, what I've been telling everybody and explaining to people is that it's exactly the opposite. It is the unprinting of money, because those trillions and trillions of asset purchases, number one, that is stripping income out of the economy, because those are assets that yield income to people and firms and institutions. When central banks buy up all the treasuries or buy up all the government bonds or buy up all the mortgage securities, they're removing enormous amounts of income from the economy. So it is deflationary. It is a form of fiscal drag, injecting fiscal drag. The other thing is that they're literally taking away the most important collateral, financial collateral, that the global financial system needs. So that's the grease that keeps the global financial system running smoothly. And they're taking that away. So what happens? You get illiquid situations, right? Which is what we've been seeing. So all these things are not inflationary. It's not printing money. It's deflationary. And that is what bothers me, because this gold reaction may be pointing exactly to that this is a deflationary act on the part of central banks, which means that the longer term outlook for the economy in general has just gotten a lot worse. But thankfully, we are seeing some fiscal response which should offset at least some of what the central banks are doing. Okay, we got the 50 billion coming in. Next week, Congress should pass a package. Germany, of all places, now talking about a fiscal package. So we'll see what happens. Anyway, stay safe, everybody. Have a great weekend. And go to my website. Remember, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. You need these understandings. Have a great weekend and be well. Bye-bye.